Yeah, I mean, I think we're close. We'll talk about our Q2 here soon, but we're seeing sort of we're right about there where we're break even.
Hey, listeners, welcome back to the Valley Bridge podcast. And today I'm here with Eric Healy. I hope I pronounced that correctly. If not, I'm really sorry. But he's the CEO of BranchOut Foods, a company that is doing quite interesting things in the food space. And so I'm happy to learn from him today. And let's see if he has any good answers for our questions.
Yeah, thank you. Appreciate it.
Yeah, so Eric, my first question is actually um, who is Eric? So who are you? What do you like, and why did you start at Branch Out? And maybe you could share some insights on that and your
Sure.
backstory.
Yeah, so I'm Eric Healy, founder and CEO of BranchOut Foods. Started it 4 or 5 years ago. My background, I was an aerospace engineer for about a 10-year career in the engineering field, and jumped into this because really my family has a pretty broad background in natural food entrepreneurship. I grew up watching my family, actually my uncle, uh, start up a kettle chip brand and grew that into an international, multi-billion-dollar business. Also, Kona Brewery, the first craft beer in Hawaii, they sold that to Anheuser-Busch. And then, my family started a cookie company about 10 years ago, and it started taking off. So I just, I kind of had that gene. I wanted to build something of my own, and decided to make a big leap and leave a pretty great career and jump into the family business there. So we built that up. Um, it was a challenging product, but we did pretty well with it. We sold it to a private equity group a few years ago, and kind of in parallel, I was playing around with this idea. My original concept was how do you dehydrate and make snack products out of really sensitive fruit that have never really been able to process before. So like avocados and bananas in a lot of formats. And I discovered, this technology that was developed in a university, and they spun it out into a new kind of equipment company. And it was just, I was blown away by the technology. It was perfect for what I was trying to do, and really fell in love with it and just believe that when I discovered it, and still to this day, that it is the future of food. It's the really it's going to replace all other dehydration technologies, in my opinion. So we went all in on it. It took number of years to really kind of build the foundation of the company that I'm sure we'll get into here today. But that's kind of at a high level, how we got going.
Nice. It's actually interesting because I interviewed Brent from EnWave,
Mm.
and so it's kind of interesting to see how companies are actually applying that technology. And so yeah, really fun to kind of connect the dots. My next question is actually on the struggles of managing a business growing at such a rapid pace. And so if you could share some of that with me and my audience, I would be really grateful because it looks very hard.
Yeah, great question. It is very hard, I would say. It's not for everyone, and that's not really necessarily saying anything positive about myself, but it takes a certain type of person to be able to just get punched in the face every other day, because that's what it is, starting a business like this and growing it. So, I think that's kind of where my engineering background, helps out a lot. Is you really learn how to just get to the core of the problem and try to solve it. Um, so it's really being that kind of entrepreneur mindset where you just got to figure out what is the base of the problem, solve it, and move forward. I've worked with, in kind of this environment, people that are kind of career corporate types, and they just struggle with that sort of thing. So it takes a type of person. It is very hard, but it's very rewarding as well. It's every day a roller coaster, so it's never boring. And that was sort of my personal problem working in corporate America. Just things move very slow, and that's not how I like to operate. So So yeah, I mean, it's definitely been challenging, but you know, we're getting there. We're making great progress, and you know, we're going to keep going. So
Nice. Okay, so now I'll jump into some of the questions I got from my audience, and I got a lot of them with regards to EnWave. And so the first one is, can you share more about the exclusivity agreement with EnWave and what prevents a competitor from buying the same machines from EnWave and replicating BranchOut's model?
yeah, good question. Yeah, so you know, we like to look at it. You know, we're a food company that has a pretty great IP moat around what we're doing. It's not bulletproof. It's not 100%. Most food companies have nothing. They just sort of rely on their brand awareness. So, you know, we have a license agreement. We're kind of an early partner of EnWave, so we negotiated for some great exclusivities. Essentially, right now we have the country of Peru locked up, and then we have several products, about 3 or 4 products that are more broadly locked up than that, like the Americas in general. So, so somebody could, you know, buy a machine and go to Colombia or another, you know, country like that, and set up business and do something similar. But you know, we haven't really seen that yet. We believe that what we've gone through in the last 3 or 4 years and the amount of capex we've spent and you know, navigating kind of building a business in one of these countries is very challenging. It's very risky, and we're kind of beyond all of that now. So somebody would have to really go through all those steps and catch up. And we just think, you know, yeah, at some point somebody probably will, but we have a very, you know, very great head start. And I think if it were, you know, a big private equity firm or CPG firm, they don't like to take those sorts of risks that we took early on, so they'd be more likely to just buy us. So that's how we, you know, we look at it. But and we also, I think our theory has been that, you know, you have to be in one of these Latin American countries, and not all of them work. Peru is really, I think, one of the most advantageous places to be. It's very up and coming and developing still, so costs are very low, but we have year-round access to really low-cost fresh produce as well. So,
Hmm.
so yeah, I think we're very well positioned.
Yeah, for me that's very interesting because with an engineering background, I guess you had to learn everything from scratch. And this is not in the questions, but I'm just really curious to know, how was that learning curve for you, and how did you manage to learn so much about like food and produce and all of that without any background?
Yeah, I mean, I think, you know, I first went into my family's business where we were doing we built a factory in Oregon and built a national cookie company out of it. So I learned a lot about the food industry there, and really more on kind of the retail side, like where to go, where not to go, and that's really important. The operation side, I'd say, kind of comes a little more naturally, but you know, I worked in some engineering firms where we'd be put on a different project every few months, and you'd have to like get up to speed and learn the whole industry in a very short amount of time. So, so you know, that's just sort of how I've been operating.
Hmm. Okay, so I guess it felt natural to you to learn about all this.
Yeah, I mean, you know, it's not without mistakes and you know, things we've learned along the way that I wish I knew in the beginning. But yeah, I mean, we're, you know, I have a great team as well. We hire very strategically, you know, specific people that know like food safety or quality systems or you know, ERP systems or things like that. So we, you know, that's obviously the other thing is you hire very specifically for things that I don't really
Mhm.
know too well. So
Yeah. And so, with all that wealth of knowledge in mind, what is the biggest challenge of running a food company or a CPG company?
in general or specific to ours.
I'd say maybe specifically to yours, like what's the biggest challenge you're finding right now, or like that you had to solve in the past, and more directed to operations. I'd say not. Yeah.
Yeah. Yeah. I mean, you know, what I learned with the family business is manufacturing a food product in the States is very expensive and difficult. And so we went down to Peru, and it's not without its challenges as well. We spent, we had a partner down there. I think if people are following our story, they would know this, but we had a partner down there originally, a European company that we were partnered with, and they pretty much immediately had financial problems and went out of business. And so that was where in 2024, kind of late 23, we saw that coming and said, let's get out of here. Let's build our own factory. So that was sort of a curveball that, at the time was really challenging and stressful, but in the end, it was actually the best thing for our business. We spent the entire year of 24 kind of navigating, like finding a building down there and figuring out the Peru legal system. How do we even set up a business, an entity and lease a building that has a buy option? And, it's definitely a different environment than we're used to. So that was really challenging, but we figured it out, and we have, a fantastic team down there. We're very stable and set up. Over the course of 2024, it was an amazing year for us. We pivoted away from this partner, built our own factory, and got it up and running by the end of the year. So,
yeah, I bet it wasn't easy, as you mentioned before in other interviews too. And to that point, I have a question with regards to Peru. Beyond Peru and North America, do you see an opportunity to build similar platforms in Asia or Europe using your model? So basically leveraging the model you've built in the last year in Peru in other places?
That's a good question. I don't, not really. Our focus right now is really the States as our market. It's the biggest consumer market in the world, and we have plenty of opportunity in front of us. So Peru is very geographically well positioned for that. We ship straight up into the port of Houston, and I think in the future, we're going to look to expand to Europe and Asia and other markets, but we can service it out of our current facility, right? I mean, Peru is a major exporter of fresh produce around the world, so there's sort of already all these shipping lanes, and I don't think we're going to find a lower cost place, and we have a lot of room to expand there. So we have looked. Our head of operations is actually he grew up in Panama, and we've been kind of looking there as well. There's some advantages, but very, very early on, we're just kind of looking into it a little bit.
Yeah, and also you've just built Peru, I guess. So
yeah,
right. Yeah, makes sense. Last question on Peru, I think, is how confident are you in reaching the projected $40 million capacity from the Peru plant in the next 2 to 3 years? And what are the biggest operational risks to scaling? I guess you answered part of this question before, but yeah.
Yeah. As far as capacity, we're confident that it can do that much. It is there's a big asterisk on that, because it really matters, what our product mix is. This year we are really focused on, it's our first year operating the factory. So we're really focused on kind of testing and scaling up our whole portfolio. But if we were to really just focus on, 3 or 4 or 5 core products that run really efficiently, I think we could actually go quite a bit above that 40 million in capacity. So, so we're happy there. And, the factory has the current building can hold 4 machines, and we have 3 in there. So we could add a 4th one pretty easily without, a lot of CapEx other than the machine itself. And then our property has room to grow from there. So we could grow indefinitely just about. So yeah, we're pretty, we've done the math, and we've been running it for about 6 months now. And, there's some products that run slower than others, and we're just aware of that. And so yeah, I think we're pretty confident with those numbers.
Okay, makes sense. And now going back to EnWave, I think it's a big theme, and investors are kind of concerned about the possible conflict of interest. So basically, EnWave obviously has an interest in selling machines, and having an exclusivity agreement with you means they can't sell machines to other people, at least in Peru, right?
Hmm.
So how do you manage this, and like how does the do you make sure that this is a win-win for both? Is EnWave counting on you growing a lot, and like they don't need to sell to other people because you're growing so much that they can just sell to you? And like how's the dynamic, and maybe clarify that for investors.
Yeah, I mean, first off, we have a fantastic relationship with EnWave. We've been working with them for years. Our team is very integrated with theirs. We know them very, very closely. So, they're going to continue to sell machines. That's their business, and that's fine. I think we are a big part of their growth objective. I think we will continue to grow, buy new machines from them. But I'd say most of their machine sales are not for this type of business model. Typically, they're for a very specific use case. Some CPG company needs it for some one step in one process, and then they sell them. They sell them to other industries like pharmaceutical and cannabis and all sorts of other things as well. So somebody that's looking to just set up a broad based kind of private manufacturer, co-manufacturer type of company like us is rare. There's one in North America that's called Microdried, and we're partnered with them, but they're really more focused on the ingredient channel. Um, so yeah, I mean, we haven't really seen anybody buy the machines yet to adopt this model that we're doing. So
Okay, makes sense. And to that point, like you're such a unique company in the food space. Like, how do you validate demand for unique SKUs like bell peppers and Brussels
mhm.
sprouts? Like, for me, that's truly interesting because I've never seen anything like it in the market. So, how do
Yeah,
you approach that?
yeah, that's a great question, and that's really, I'd say, fundamental to our business. When I first met EnWave, I went up there to Vancouver and toured their facility, but more importantly, I toured their product development lab, and I was just blown away because this technology can do anything. I mean, it's absolutely incredible what EnWave has just kind of developed at a small scale in their lab, and nobody has commercialized yet. So that was really my aha moment: is this technology, it can produce so many different variety products that have never, that the market has never even seen before. So that's kind of our whole mission here, is to try to utilize this technology as broadly as we can, develop as many different products as we can, um, throw them at the wall and see what sticks, right? So we have a small 10 kilowatt machine in Peru, and we have a small R&D team that's all they do every day is come up with new ideas, try to dry it, try to dial in the process, and see if there's a product there. So we are, very focused on product development, innovation, and just really trying to figure out what all this machine can do. So we do that, and I'm down there. My head of sales is down there in Peru probably once a month, and we have these meetings where our R&D manager just throws everything out on the table that he's created, and we try it all, and some of it goes in the garbage, some of it goes on to the next stage, and it's really the fun part. So yeah, I mean, Brussels sprouts were actually an interesting idea. That actually came from a Costco meeting. We had a meeting with a Costco buyer a while back, and she said, "Yeah, Brussels sprouts are really trending. I really want a snack product. I've never seen one. No one's ever been able to do one." So we went and back and worked on it and developed it, and it turned out to be a great product. Um, so yeah, I mean, we just kind of take this rapid iterative approach and see what works.
hmm Okay, so basically, your strategy is based on being nimble and just like experimenting as much as you can, I guess.
Yeah, yeah.
Nice. And to the point of Costco, you mentioned Costco. How dependent is BranchOut Foods currently on Costco and Walmart? And what percentage of 2025 forecasted revenue do they account for?
Good question. I think we kind of have these three legs of our revenue right now. So we have the ingredient business, we have Costco, and we have Walmart. And we'll see where they shake out, but I think they're pretty even. And that people always think that Costco is very risky because it grows quickly and they can drop you, but we're taking a little different approach to it. Most companies will have one product, right? They have their one main SKU. It goes into Costco and it kind of ramps up, and then they move out of it. But with our innovation platform, and that's kind of the point we've been trying to make, we have 4 or 5 different products right now in various Costco regions. There's 8 Costco regions in the US, and they all make independent decisions. So we're very, it's technically one customer, but we're very diversified within that customer. Again, we have 8 different buyers that we're creating relationships with, and we continue to innovate, right? As we, develop new products, we show them to Costco first, and a lot of times they like it. So one other thing about Costco that's pretty exciting, so right now all of our products, there's basically 2 departments, 2 grocery departments within Costco. There's department 13 and 12. All of our products right now live in department 13, but we're developing a whole new product line. They're multi-pack for kind of kids, right? And that line will be in department 12. So what that does for us is it basically creates like almost 2 different Costcos, right? Because they're different departments, different buying groups. So when we launch that, we're going to have basically double the opportunity with Costco. So we're really excited about that. That's going to be launching most likely kind of end of the year, Q4 time periods. So, it grows the Costco opportunity substantially.
Yeah, that's very, very interesting. And it looks like you almost came in with the knowledge that other people have to pay for to start dealing with retailers. It looks like you already had a bit of that when you founded BranchOut. And so I'm curious
Absolutely,
to know
yeah, for sure.
what kind of lessons or insights can you share with us on how companies deal with these retailers and how do they manage these relationships? Because at the end of the day, it's a very important pillar of your business model, right? So how does it look like on a day-to-day basis? And yeah, is there an ongoing discussion, or like how do you work with them?
Yeah. So, I mean, the lessons learned here from my previous business, and my head of sales, he's been in previous food companies as well. The main kind of grocery channel is sort of locked up by 2 main distributors. So there's a distributor called Unify and one called Healy, and they kind of own the whole market, right? You kind of have to go through them to get into the grocery stores. And because they own that market, they just treat suppliers like garbage. To be honest, they really they're not transparent about what they charge back to you. They just don't pay you. They just make it really, really difficult to do business. And that's really come about in the last kind of 10 or 20 years, when all these food companies got a lot of private equity, a lot of venture investment, and just had a lot of money to spend to grow their brand. And so these distributors and the retailers as well have kind of taken advantage of that. And it makes it very, very challenging to grow a brand profitably. It was possible probably back in the 80s or 90s, but now it's just very difficult. So that's a lesson learned. A lot of companies out there still do it. They raise a ton of money, and they don't have the IP behind them like we do. So they just go out, and it's a race to see who can build the brand the fastest at no expense too large, right? So our approach is very different. We're very, we understand the pitfalls there. So, Costco and Walmart are very clean businesses. We don't have those problems there. We ship directly to them. They're big enough. They have that big scale that they don't use those distributors. But we do need to grow our brand. That's the main channel. That's where the large business lies, the large opportunity, I should say. So our approach there that we've come up with, and I think it's really brilliant, and it's going to be great for us, is we are selling into the produce department of grocery stores. So we've developed this snack line, the snack pack line, again aimed at it's a multi-pack snack line for moms will buy it for their kids to put in lunches. And it lives in the produce department of the grocery store. So it'll live like right above the fresh fruit or below the fresh fruit. And that whole part of the grocery store is serviced by kind of local independent distributors or direct. So it kind of circumvents that whole problem that everyone else deals with going into center store. And then there's a lot of other advantages. I mean, that part of the store has more foot traffic. You don't pay slotting fees typically like you do in center store. And our product just really fits there. It just fits in produce because that's essentially what it is. It's fresh produce that's dehydrated into snack format. So that's our move for 26, and that's where we see a lot of growth coming from. And yeah, I mean, we're really excited about that strategy.
So tell me, why aren't other companies kind of doing the same, right? Because it seems like a no-brainer, right? Are you the first one to figure this out? Or
no, there's others, but you have to have a product that makes sense in the fresh produce department, right? Not everyone has that. There's a couple other freeze-dried brands, and it's actually really great. There's one in particular freeze-dried brand that has kind of paved the path for us there. They've built about a $20 to $25 million business with a couple products in the produce department following this exact same plan. So no, we actually didn't really come up with it. We've sort of seen that this other company is doing it. However, they are a Chinese sourced freeze-dried product, and we believe they're about to see some significant issues. You know, they have a new 55% tariff that's hit them. American consumers don't necessarily trust food from China and places like that. So, you know, the great thing there is we're not really taking a big risk at a new idea. It's already been done and proven, but we have an opportunity right now to go in and compete.
Makes sense. And with ongoing discussions with Target and Kroger, what are the key hurdles to landing new national accounts? And can you share any pilot timelines or criteria for national rollouts?
Yeah, I mean, the hurdles there are just these retailers internally have to pull the trigger, right? So sometimes we've run into this where the retailers are, you know, they always love our products, they love our team and kind of everything we offer, but they're big companies, so they have to kind of internally figure out what they're doing and when. So I don't have a clear time frame from either of them yet. They've both tentatively said, you know, early to mid 26. But, you know, we're excited about it. I mean, there's a lot of smoke there, so there's going to be some fire, you know, in a good way. And, you know, we'll just keep growing from there. So we're meeting with Walmart as well about their center store freeze-dried section. So that entire set is all sourced from China as well. So we see a lot of potential tailwind with the tariffs, because all of the freeze-dried products on the shelf in the U.S. just about are from China. So,
okay, makes sense. And so, from what I understand, tariffs are actually a positive for you, like a net positive.
Yeah, I mean, you know, Peru is one of the countries that has 10%, but our model again is we ship up in bulk, so we ship full bulk containers, and then we bring it to our packaging facility in Texas. So really, only about half of the product is subject to tariffs. You know, like with the end product sitting on the shelf, like maybe roughly half of that value is actually imported. And then we package it, we season it, we package it, we box it, we mark it up, right? So all of that is on the US side.
Okay, makes sense. So now pivoting a bit more into the financial or investing side of things. What is your dilution strategy going forward, and when will cash flows sustain the business for the long term?
Yeah. Yeah, I mean, I think we're close. You know, we'll talk about our Q2 here soon, but you know, we're seeing we're right about there where we're break even. I think the issue kind of this year though is, again, we just opened the factory. We need, you know, it's a factory, right? It's very complicated. There's a lot of learning curves. We built an entire new factory. We have 200 new employees as of January, with this complicated technology, and we're also trying to rapidly grow our product portfolio as quickly as we can. So, so we're really this year investing a lot in developing new products on the small scale, but also ramping them up. So that takes time. Like right now, we are producing strawberry all month for a Costco order, but it's our first time ever running strawberry, right? So it sounds simple, but it's not. Handling fresh produce, there's a lot of intricacies, a lot of challenges. It comes in, we slice it, we pre-process it, we, do all of these things to get the product out the other side that's of the highest quality possible for Costco. So every time we bring on a new product, it's the first time we've run it basically this year, right? But we'll get through the year, and we'll have a very large product portfolio that we've scaled up, we've proven, we have it, the process dialed in very efficiently. So there's a lot of that this year that's, we can kind of attribute to R&D and scale up. But I think we've seen the light. We have, you'll see in our Q2, but we're right about there. So any growth kind of beyond this should be, beyond that level. And, we see a lot of growth coming. We are going to be investing a little bit. We're doing a very small limited ATM right now to really grow out the sales team a bit. So we're hiring a marketing director, potentially another salesperson, bringing on a sales broker network to launch this produce product that I've been talking about. So we gotta lean in a little bit to make sure that we can continue our growth rate. We can capture this market opportunity that I described with these other products. So we have a great opportunity in front of us with that, and we need to go after it while it makes sense.
Okay, got it. Yeah, I think that's a great answer. And given the progress on debt reduction and operational improvements, what key metrics should investors watch over the next 6 to 12 months to evaluate whether BranchOut is on track to eliminate all current liabilities without requiring any further dilution?
Yeah. Just keep an eye on those metrics. We're actively paying down our debt. We have a cash flow model that we've built out that kind of predicts the whole year, and we show it all being paid off. Now that can change, right? If we get like really large orders, then we have to use that cash to make the orders and wait to get paid on it. So that's kind of been the challenge, actually. I mean, it's really a good problem. We took on some debt, but the orders just kept growing, so we have to recycle that money back into production. So we still plan to eliminate all the liabilities this year, unless things really move for the upside with additional production. So not sure what else to say about that. That's basically the plan. It's been the plan, and we've already paid it down substantially. So
nice. So actually, when investors or we as investors see like BranchOut raising some debt, maybe it's because it's like a good thing coming up, not a bad one. So
right, yeah, we're it's mainly for these growth initiatives. So we gotta, I think we have this really amazing opportunity right now, again, because of the tariffs and this produce idea. I really believe that BranchOut can be a national brand, a national name. We're positioned for it perfectly, but we gotta go after it.
Okay. And with regards to the cost per unit, it's how is it trending, and when will gross margins normalize again in the 30 to 35% target?
Yeah, I think we're much closer to that now. The challenge has been, the factory itself is built for 40 million. As we said, we have 200 employees there. We have 3 large scale machines. We have a lot of CapEx that's being depreciated, right? So the factory needs to be, when we price all of our products to retailers, we assume about a 60% utilization on the factory. So, Q1, we're probably 30. or less, really, right? Q2 were maybe 40. Um, well, maybe, yeah, maybe I take back those numbers. I don't remember exactly the utilization numbers, but it's low, right? Is the point. We're barely getting going. So the factory has a lot of additional capacity, or in terms of the margin, we have a lot of overhead that we're putting into that margin, right? Um, so we've done the models, and it looks like, yeah, when we get to that utilization that we price all the products around, then we do have those margins. So
Okay. Okay. Makes sense. And you've described a three-pronged strategy, so ingredients, private label, and branded. What's the ideal revenue mix long term, and how will each channel contribute to EBITDA? If you can share that.
yeah. Yeah, I mean, I think right now we are probably even between the three. Ingredients is sort of it's a great business. It's I'd say tighter gross margin but better net margin, because we don't have to pay for any marketing or anything like that. It's just a very predictable, stable business that seems to be growing, and we have a lot of shots on goal right now with our partner. A lot of things brewing, so we think that's a great business that'll keep growing. Private label is similar. It's probably in the 30s, but because it's the retailer's brand, we don't have to pay for any marketing or anything like that. So those two were really meant to kind of build the base of the business and help us get to profitability, to position us to build that brand. I'd say the only caveat is Costco is our brand, but Costco is just such a great partner. They're such a great retailer to work with that we don't, they pay us well on time, and it's predictable. So that's a great place to build a brand. So I think as we grow in the future, though, the brand is going to get us more of a multiple, especially if we want to exit someday. Building that national brand is really where we'll get, that ultimate, the multiple that everybody wants, right? So I think there'll be kind of a general transition over the years where we move more towards that, or I'd say, invest more in that side of the business and try to grow that side of the business.
Okay, perfect. And I have one question back on Peru. I guess Peru is now one of your pillars. I guess you produce everything from Peru. Is there any contingency plan if operations are disrupted due to political, logistical, or labor issues?
Mm-hmm.
And yeah, how are you thinking about this, especially the labor issues part?
Yeah, I'd say, as I mentioned, we're exploring Panama, maybe setting something
Uh-huh.
up there. It would be very long term, no concrete plans, but um, we're not too worried about it. I mean, Peru had some issues a few years ago, but nothing was really disrupted. So we're just really focused on Peru right now. I mean, there's, EnWave has a small facility in Vancouver, and we've used them kind of while the factory was still getting set up. We used them to produce some stuff. And then Microdried, our partner in Idaho, has a facility. Of course, we can go to them for things, but it's a lot more expensive and really
Okay.
limited, very limited products. But yeah, there's other plans or other opportunities like that. So
Okay. And last question from the investors is, are you open to acquisition offers, and what type of valuations are you seeing in this space? Then someone mentions like a price to sale multiple. I don't know if it's updated, but it says 3.8. Maybe it's more, maybe it's less now. But you're currently trading at this multiple, and it doesn't seem to allow for much of a premium. So
mhm.
how do you think about this?
Yeah, I don't too much, to be honest. I mean, we're very much in the beginning. We see a lot of low hanging fruit in front of us, pun intended, I guess. But so yeah, I mean, if somebody came to us and offered us a really great deal, we would consider it. But I just think we want to grow this first to a couple $100 million, and then we'll see what happens. But I think it's too early for that. But you never know. So I think it's interesting. There has been starting to be some pretty big acquisitions in the food space in the last several months. So it's starting to seems like it's kind of starting to come back. But we're really more focused on just running the business and scaling it and
Mm.
making it efficient. So
Makes sense. Nice. So I think you graduated from the investor questions. I have some personal questions for you now, and the one that I'm most interested about is on the legacy of your family and how it influenced you in your decision making and approach to risk. Because at first glance, it might seem that you're taking a lot of risk because obviously building a plant from scratch in Peru and then also like experimenting with all these crazy SKUs and all that. But yeah, just curious to know like how do you frame risk in your mind and
yeah, I mean, I think it is very helpful to come from a family of entrepreneurs. My grandfather also he started a ski area, a ski resort in Oregon, so that was kind of a big deal where we grew up. So it's just sort of I think seeing it happen, watching somebody really closely build something and being successful at it, just kind of helps you understand that it is totally possible and totally doable. And rewarding. So I think that's the big thing, and yeah, I think just kind of watching that and being inspired by various people like that are close to you. So I think risk is what we're doing is risky, but sitting in a corporate America cubicle for 40-year careers has its own risks. I mean, you have no control over over your destiny, right? We're here, we get to control what we're doing every day, and it's up to us to make things happen. So I like that
mm,
aspect of it.
okay, makes sense. And I'm also curious on the hardest lessons you've learned as a founder and how those lessons shaped you in who you are today, into who you are today.
Um, yeah, that's a good question. Hardest lessons learned. I think it's just in general, it's a lot. Everything is a lot harder and takes longer than you expect, and a lot harder than you expect. I think the number of times we've sort of pivoted this business in the beginning. I mean, this is not what we thought it was going to be. We set out to dry some avocados in Oregon, in a small facility in Oregon, and it just like, I think the lesson is you got to just keep going and never give up, and just if something doesn't work quite right, don't give up, just pivot. So we
Mm.
pivoted multiple times with this business, and we ended up where we are today, which I could have never imagined this 4 or 5 years ago. So it's been really great. But I think that's maybe the other lesson is just um, that kind of tenacity, just continue to move forward even if you run into problems, and figure out a way around it. So
Mm. Okay, so as a follow up, when things get tough and you have setbacks, delays, unexpected costs, how do you stay focused and grounded in what matters and fixing the problem?
um, yeah, I think just kind of stepping back and looking at the bigger picture, looking at the good things that we've accomplished. It's really easy to just fixate on the problems and not kind of like, you got to just step back and look at where we are. Where were we a year ago? We were nowhere. We weren't anywhere near where we are today. So just kind of focusing on what we have accomplished, what is going right, and then kind of zooming back in and trying to solve the product problem from that perspective.
And does it ever get you personally? Like, I mean, it looks like you're very good at like looking at a problem, fixing it, and at least from the outside. But how do you manage to, to avoid making it personal or like bringing it back home, or something like that?
Yeah, I mean, that's really challenging. I mean, it definitely weighs on you, but I think for every problem or bad thing that happens, something really great seems to happen as well. So
Mm-hmm.
we'll have a problem with something, but then we'll get a large order from Costco, and it's fantastic. So there's kind of the, for every down there's the up, and um, I think also kind of seeing consumer response to our products. I mean,
Mhm.
we get a lot of people on social that just rave about them, and like they've never seen anything like this, and so it's taking kind of the rewarding side of the whole experience, along with the problems, I think helps a lot.
Okay, got it. This is a bit of a random one, but what's your favorite SKU?
Well, I'm in a unique position because I got to try everything that isn't even out yet. Um,
Uh-huh.
I think there's this berry very specific to Peru. It's called a golden berry,
Okay.
and it's a really great product. It's we dry it and it's crunchy but really tart and really sweet. Um, I don't think it'll actually be a product because nobody knows what it is, but it's probably my
Mhm.
favorite thing that we make. I'd say, beyond that of all the products we're doing, I really like the Brussels sprout. I think that's really cool. Most people like the pineapple. That's usually the number one, and it's great as well. But I'm more of a savory, salty type of
Mm,
person, so the Brussels
got
sprouts are
it.
great.
Got it. Okay, and now switching gears a bit, I'm really delving into this area of investor communication and yeah, what matters and what are the challenges from both sides, like from the investor point of view and the CEO point of view. So I'm curious to know what's your biggest challenge when it comes to communicating with investors. And I know you have someone on the board that helps you out a lot with that and has an investing background. But yeah, just curious to know your thoughts on this.
Yeah, I'd say it's more that we just haven't done it, and that's probably an opportunity for people listening here.
Hmm.
We just haven't really done a lot of investor relations or reaching out, or we went to one conference this year. So I think the general market still doesn't even know who we are, right? We're just not very
Right.
well known. We've been busy. So this is, talking to investors has kind of been the last thing on our minds. But I think, moving into 2026, we're putting together, um, more of a like investor conference schedule where we're looking to do a lot more things in this space. So, yeah, we have one person on our board that's sort of heading that up for us. He's very experienced in this world, and we plan to do a lot more of this. So, I think, again, I think that's kind of presents an opportunity for people that are listening to this or learning about us, but just the fact that not very many people know about it is probably a good opportunity.
Hmm. Okay, got it, got it. And again, switching gears, how do you personally define success, and how has that definition changed over time as you learned and failed and so on?
Sure. Yeah, I mean, it's, I guess, easy to just put a number to it, but I think one of the things kind of beyond just the numbers is we go down to Peru and we go to our factory and just see all these people there that are working, and
Hmm.
it's really the best feeling ever. We're employing about 200 people down there that would otherwise not have a lot of opportunity. It's a very economically depressed area, so kind of creating all those jobs, they're all very happy. We treat them very well. We pay them well. We cater their meal every day. We do a lot of great things for them. So just going down there and kind of seeing the transformation that's happening in the local area where we're operating, is really really rewarding. And it's not something we started out trying to do this to make money, and we're still doing that, but that's kind of another side of the story that we weren't really expecting, but it's awesome. So,
Hmm.
but I think kind of more on the financial side, I think if we, our goal is to build a national brand around these products. We really believe that these are better than anything else out there. They're healthier, they're cleaner, they taste better. There's never really been, in my opinion, a good fruit based snack product line, just crazy to think about. I mean, it seems like such an obvious thing. So, as we go forward, I want to build that national awareness around BranchOut, and I think that's sort of my definition of success on that end.
Nice. And I was about to ask you on what makes a good company culture, especially since you're managing 200 people that aren't even part of your culture, say the US
Mm.
or North America. So what have you learned on that side, and what defines a good culture for you?
Yeah, you're right. It's unique. We have about 6 people in the U.S. So we kind of have our group here, but then we manage about 200 down there, and I think we're small enough still that everyone just knows everyone. We all get along great. We do a lot of kind of events together. Like we travel together a lot. We're going down to Peru a lot. We go to trade shows together. So right now it's still small enough that it just kind of feels like a family or a small
Mhm.
team. And then when we go to Peru, we do a lot of things down there. They're very prideful around a lot of like holidays and celebrations and stuff. So we sponsor a lot of company. We had a really large Christmas party with everyone, and a lot of other holidays and happy hours. We do a lot of events down there to really include the Peru team with us, and the Peru team is just blown away by how we do that. We kind of bring this like American model down there. They're used to big companies coming in and just kind of taking advantage of them and not really valuing them
Mhm.
as people. So the way we operate is completely different, and it's created this. Yeah, we have technically two different cultures, but um, it's one big family that feels really great. So
Okay, interesting. And I also would like to understand what mentors or experiences have an outsized impact on your leadership style,
mm,
because it almost looks like you're approaching leadership in a whole different uh, like level or style, with this like treating employees from Peru well and all that. So yeah, who was your biggest influence?
yeah, I think again, my family members. Kettle Brand was not just about the bottom line as well. They were the first all solar factory in Oregon in the 90s. They treated everyone really well. They kind of did all these things before it was cool to do all those sorts of things. So,
Mhm.
I don't know. I'd say kind of watching that. And then I just believe that everyone, if everyone's happy and working towards the same goal, it's going to be a better outcome for the company. Right. So all of our key people have a lot of stock options. We've given away a lot of stock options to our core team, and I think there's potentially some dilution there, but I think in the end it's more valuable because everyone is aligned to the same goal. Everyone wants that price to go up. So just sort of making sure everyone's taken care of and happy, and aligning everyone to that same outcome.
Mm. And to the point though, you mentioned the price to go up. And one question I usually ask to CEOs is, how does it feel to be a public company CEO? Because it almost feels like a different game from being a private company CEO, or like at least different in some parts, because
Yeah.
you have another stakeholder, or at least more stakeholders in that sense. So
Right.
yeah, how do you think about that? And I guess you were never a public company CEO before, so
Correct. Yeah.
how are you managing that?
Yeah, I mean, I like it. It's not without its challenges or extra work or extra expense. But there's so many stories, so many countless stories of private companies trying to do something like this, where they take on a private equity group, and the founders get ousted, and they take it their own direction and have different ideas, and it just never seems to end well. So I've seen that happen so many times with private companies, and I like this because it's we maintain control of the company. We're the founders. We have the vision, and we get to operate it see how we see fit. And I believe the founder led company is much better in a number of ways than the latter. So it's been definitely worth it for a number of different reasons.
Got it, got it. Okay, so last two questions, and we are done with this wonderful conversation. The first one is: what advice would you give to yourself or your 19-year-old self, knowing what you know today?
Yeah, that's interesting. Yeah, I think it would just be kind of what I said before. You know, you gotta work hard and push forward and just solve one problem after another. But um, it's going to take longer. It's going to be more complicated. There's going to be problems pop up that you can never even anticipate. But you got to just keep pressing forward and have the faith that it's going to work out. Right? It's going to work out. It always works out in the end. So I think just kind of reiterating that, taking that sort of approach to it.
Okay, got it. And last question: what do you hope your team, investors, or family say about you in 10 years' time or 20 years' time?
Yeah, I mean, I think again, the goal here is to build a national brand around this healthier product, right? So,
Mm-hmm.
um, there's kind of this double side of the coin here, where in the U.S. we're bringing healthy products that are, have never really been available before. So real fruit and vegetables, dehydrated, where we maintain all the nutrition and the flavor. So kind of helping people become, adopt more of a healthy lifestyle from that aspect and building a national brand around it. That's what I want people to remember. And I think that'd be a really incredible victory. And then the other side of it is for all the success we have in the market here, we're economically benefiting the Peru economy down there. The people that are making the products for us, the farmers, kind of everyone in that whole ecosystem is going to be uplifted by this. So, I think that's what that's our goal. That's what we're going to accomplish, and that I think being remembered for kind of accomplishing both of those would be pretty great.
Hmm. Okay, yeah, and hopefully also raise the standard for the other companies operating in Peru.
Yeah,
Uh, I think
absolutely.
that's very interesting. So yeah, I'm really grateful for this 1 hour you committed to me and my audience, and let me know if you want to redirect the listeners to, I don't know, to any place, the BranchOut website. I will include that in the description, and yeah, just thank you so much for
Yeah,
everything.
appreciate it. Go to branchoutfood.com. We have our products available there. Or we're on Amazon now as well. So leave us a good review and appreciate it. Yeah.